The Central Bank of Sri Lanka released its latest market operations report on 31st July 2026. The Market Operation Report aims to enhance stakeholder understanding of the monetary and foreign exchange operations undertaken by the Central Bank in the pursuit of implementation of monetary policy within the flexible inflation targeting framework supported by the flexible exchange rate regime. The latest Market Operation Report provides an overview of the policy stance of the Central Bank, liquidity conditions, short-term interest rate and exchange rate developments, as well as money market and domestic foreign exchange market operations of the Central Bank, with a particular focus on the first half of 2026. The Market Operation Report also presents two feature articles on the foreign exchange market and exchange rate dynamics and currency in circulation and implications for monetary policy. Further, the Market Operation Report includes selected indicators of market operations and transactions. The Central Bank tightened its monetary policy stance in 2026 to safeguard price stability. Tightening of monetary policy, along with macroprudential and foreign exchange-related measures, supported the stability of the external sector. Surplus liquidity in the domestic money market persisted, supported primarily by the central bank's net foreign exchange purchases despite intermittent declines. Short-term interest rate adjusted upward in response to monetary tightening, reflecting effective monetary policy transmission during the first half of 2026. The central bank aligned its monetary operations with the prevailing monetary policy stance to manage liquidity, steer short-term interest rates, and support orderly conditions in the money and foreign exchange markets. The exchange rate experienced some depreciation pressure similar to peer countries during the first half of 2026 amid heightened global uncertainties and elevated foreign exchange demand. The central bank intervention in the domestic foreign exchange market was primarily aimed at curtailing undue exchange rate volatility while accumulating reserves at opportune times. During the first half of 2026, the central bank purchased a substantial amount of US dollars while also undertaking foreign exchange sales, resulting in a net absorption of $556.3 million US dollars. These operations were undertaken in line with net foreign exchange inflows to the domestic foreign exchange market, despite elevated import-related demand and global uncertainties. The gross official reserves remained at $6.5 billion US dollars by end June 2026, supported by net foreign exchange purchases of the central bank, despite foreign exchange sales undertaken to contain exchange rate volatility and meeting external obligations. Activity in the domestic interbank foreign exchange market moderated during the first half of 2026 amid heightened external uncertainties before improving towards the end of the period. The growth in rupee deposits moderated during the first half of 2026, while refinements to the statutory reserve requirement framework strengthened reserve management and the effectiveness of monetary operations. Currency in circulation and reserve money increased. Central bank's holding of government securities declined marginally during the first half of 2026. The central bank will continue to conduct operations to achieve the objectives of the bank while supporting further development of financial markets. In doing so, the central bank will contribute to building a strong and stable economy by maintaining price stability and external stability through the effective implementation of its monetary policy as well as foreign exchange policy consistent with the prevailing monetary policy stance.